Hey everyone, Sam here. You should be able to see the screen and sound should be fine. I did not realize that the microphone was not on, so sound should be good now. I've been talking away. All right. Hi, Brazil. Where's everybody from today? At the Pinnacle Institute, we have members from over 40 countries around the world, and just a great membership community and great people. All right. Good to see everybody. Don't be afraid of growing slowly. Be afraid of not growing at all. Probably most importantly, as it relates to trading and investing, make sure you grow the right way, right? Speed is not important here. What's important is learning, the right way to do all this and think all this, and then taking the proper action according to rules. It's another session. Supply demand zones at work, where we look at opportunities from our live trading and analysis sessions that day or the day before. And let's go over today's theme. Before we do that, remember, I'm a licensed fund manager, but the Pinnacle Institute is not an investment advisor. Remember, there is no guarantee of success when it comes to trading and investing. And what most people don't want to tell you is that the majority of active traders lose money. So be careful, take it slow, make sure you understand what you're doing, make sure you're okay with the risk. Excellent, good. So today's theme, every day we have a different theme. If you've been watching, let's take a look at so we had a rally drop supply zone. So there are four structure, it's all about structure and location analysis, right? When we talk about the original supply demand strategy, it's all that structure and location analysis. When it comes to structure, this zone had all four structure criteria that must be present. And it also met the location requirements. Okay. But what I want to focus on today is not just where your big supply demand imbalances are, because as we know, that's where price is most likely to turn. What I want to focus on today is where we don't have big supply demand imbalance. Identifying the area that price is most likely to move through. Right? Remember, all of this, everything we do, our rule-based structure location analysis, okay, is meant to answer two questions. Where is price likely to turn, right? So let's take a look at this area in here. We always focus on where price is likely to turn. Let's focus on the second question today. If you look at this area in between the moment the supply zone is created to the moment price comes back for short entry, if this is a trade you want to take. I have to be remote today, so that might be part of the reason. Let's go. So now the second question, where's price likely to move to? So we expect it to turn lower at this price, right? But look at this area in between. Price has gone down here one time, then gone up again through that area, and down again through that area, and then up again through that area. So 1, 2, 3, 4 times in this area, right? The fact that price goes through this area means there's a lack of a significant supply and demand imbalance to stop it. If there was a significant supply demand imbalance in here, right, or a demand zone, for example, well, price would not be able to go up and down and through this area like that. 4 times, let alone it wouldn't even be able to go through this area once. But it did. It went up and down through this area 4 times. So that tells us that the likelihood of a significant demand zone in this area, which is what would stop prices from falling, the likelihood that there would be one in here is very unlikely. Okay. You can see we have a rally base rally right here. Doesn't work, right? Price goes right through it. Rally base rally maybe works a little here, but goes right through it. All right. Supply and demand zones inside this area are so low probability that we do not expect them to work. Okay. The bet in the trade is that price is going to go through this area, obviously, before going up through the supply zone, which it ultimately does. All right. So again, the focus, where is price likely to turn and where is it likely to move to? That second question is identifying areas where, yes, fair value, the novice space, if you've heard me call it that before, but those areas where you have a lack of a significant supply demand imbalance. And that's what I wanted to focus on today. Okay. Here's another one that fell from our supplies, and we went over this one on the supply side the other day. And the Nikkei then fell all the way down to our qualified demand zone, almost touched line right here, and began to trade higher. But it's the same thing here. Notice trading activity in the middle. When price comes down to here, we expect this turn to go down to at least here. And then if we want to know where it's likely to go below that, we have to identify the demand zone below that. Okay. All right. So hopefully that was helpful. Remember, the rules and logic for all this are not that difficult. I would argue that they're quite simple. However, the act of doing this is not easy. Okay. Execution of proper trading and investing is where people have the biggest challenge. It's not comfortable for people to buy when prices are down and sell where prices are up. That's why we make sure that on top of the objective supply and demand rules, we just make everything 100% rule-based. Hopefully that was helpful.